All right, everyone, welcome to a trading breakdown. In this breakdown, there was a trade taken on the 20th of March, and that was an impulse entry trade around pre-New York session. This is a trade that we also sent in the Discord for everyone to see and where we expect the price to go. Now, before the trade happened, let's take a look at the 1 hour time frame right over here. Now, this was a situation where we were in, okay? The 1 hour candles were printing heavy bearish candle. Next one was a small body bearish candle. Now, if you've gone through webinars that talk about, impulse entry and trend, you can see that this was not a perfect example of an impulse entry and trend over here if the candle broke below the low, because you needed a smaller wick over here, and we had clean range to justify below this wick, but that would have been a good entry. Next, we had a candle that formed like this, a small body candle, a perfect opportunity for impulse entry and trend for price to continue to push down. But the problem was as price moved, usually we would want the candle to make a top wick and then break the low to continue to push down. But in this scenario, what happened was there was no top wick. And I know there were a lot of traders who were waiting for price to make a top wick so we can continue to push down. And there was no top wick. And if there's no top wick, this basically, there's now a probability, right? Sometimes we know that candles have top wicks or bottom wicks, or sometimes candles don't have top wicks and bottom wicks, just like right over here. There's no top wick, over here as well, there's no top wick. So you use your intuition, right? This is where intuition comes handy. You use your intuition that, okay, we're moving. What's the probability we can continue to push down? Can we make an attempt, right? So this is what I did at this point. Now, if I look at this candle, the entry was not taken over here, right? The entry was 30.38. Somewhere below, we broke the wick of this candle right over here, right? Because look, if we broke below the low, the stop was literally 10, 11 pips. And the volume that we've seen in gold, having a stop of 10, 11 pips, you're basically inviting your stop loss to get hit, So that's a very, very small stop loss. Now, I'm not saying having a small stop loss is a bad thing, but you need to be logical about the fact, right? If this candle broke below the low and you take a sell having the stop loss right up over here, what if the candle comes up to make a top wick? What if that happens, right? So in this specific scenario, okay, specific to this scenario, I waited for price to break below this wick here to the left hand side. And if I'm measuring the stop loss now, this becomes like a 30, 33, 34 pip stop loss, right? Now it's a very big stop, bigger than what I normally want. This is on the 1 hour time frame. Let's take a look on the small time frame. Looking at the 30-minute time frame, let's take a look at this right over here. This is the 30-minute candle. Okay, so looking at the 30-minute candle, this is where the 30-minute candle starts. Now, this is also the start of the 1 hour candle. Now, just logically look at this. We have a support here to the left-hand side on the 30-minute. And if you are taking a sell based on the 1 hour, which is, where the hell did it go? Yeah, right over here. If you're taking a sell right over here on the 1 hour time frame, and if you look on the 30-minute, now you're taking a sell right above the 30-minute support. Right over here as this breaking the low. So your stop is 10, 11 pips. You're taking a sell above support. Makes no sense at all. So I waited for price to break below this wick or this support to the left. Because if we are breaking below this low and we have clean range here to the left hand side, what's the probability we will continue to push up? Very low probability. So my stop loss was not above this candle. My stop loss was somewhere within this range. Because I'm saying to myself, that if we are breaking below this low here to the left hand side, price should have no business coming back in the range. I think this was also recorded on the live stream as well. The price should have no business coming back in the range, because if it does comes back in the range, retraces, then it's probably going to continue to push up. And as it's breaking below the support and below the wicks, just ask yourself, will it come up to make a top wick? Or what's the probability it will come up to make a top wick? I'd say less than 10% probability. And then the bottom line is, are you willing to take a chance on that probability? I am, There's no such thing as 100% probability, but there's something called 90% probability, 80% probability, and I'm going to be taking chances on those probabilities all day, every day. And that's basically what happened right over here as well. I hope this breakdown was helpful, but let me go a bit further and let's break down another trade, which was hold on. Okay, hold on. So, was it this one? No, not this one. This one was on the 19th. Okay, yeah, let's break down this trade. No, actually, okay, so that one was on the MT5. So let's take a look at this right here. Okay, this is MT5. Let's go towards history. Pretty funny to see this, right? Gold. Okay, so let's bring up gold. XAU USD right here. XAU USD. Oh wow, look at that. So let's remove show object descriptions. Let's zoom in, and this was taken on the 30-minute time frame. Let's go to the 15-minute time frame. Yep, right over there. Let's go towards properties, scale fix. Awesome. Very nostalgic, right? Looking at MT5, very, very nostalgic. So this was, so I gave my trade 2 chances, right? One was right over here, didn't really work out, whatever. Then this was the trade right here. Price was bullish. We closed with little to no wick on the top, and that's where the buy was taken after we made a lower wick to continue to push up. Looking at the 30-minute time frame as well, 30-minute time frame was breaking above the high. This was an impulse entry. At that time, some of the candle wasn't formed. Yeah, I don't think there's much learning from this trade. This was just impulse entry for price to move up, but then we just ranged. But the best learning was from this trade right over here. So we're going to ignore that. We're just going to focus on this one. This was a very, very good learning trade. Very good. I was very pleased with that. All right, awesome. So hopefully this was useful, educational. We're going to see you guys on Monday. Also, remember, the commissions on CTrader are going up from Monday. So if you haven't yet, move on to MT5. It's going to be the same commissions on MT5 as it were before. But yeah, that's about it. Okay, take care, everyone. Be safe.